Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex language of corporate filings. And let me tell you, this one speaks volumes about embracing the future, with a side of digital gold. Today we are diving deep into Subversive Bitcoin Acquisition Corporation's S-1 filing, a document that is essentially a roadmap for a company looking to make a splash in the world of digital assets, specifically by merging with a business in the crypto and blockchain space. They are here with a rather unique twist, aiming to hold a chunk of their offering proceeds in Bitcoin. Let's see what that really means for investors. So this document, filed in November 2025, is the initial registration statement for Subversive Bitcoin Acquisition Corp. Think of it as their official announcement to the world saying, we're here, we're raising money, and we have a plan, sort of. This S-1 filing is the big one for companies going public. It is where they lay out everything an investor would need to know before putting their money in. Their name itself tells a story, doesn't it? Subversive Bitcoin Acquisition Corp. They are a blank check company, meaning they exist solely to raise money and then find a private company to merge with, effectively taking that company public, and their target businesses in the cryptocurrency and blockchain sector. Interestingly, they are incorporated in the Cayman Islands. This is common for SPACs, but it does mean that Cayman Islands law governs many of their corporate affairs, which can differ from US laws. They want to get this offering out the door as soon as possible once everything is approved, which is typical for a SPAC that has a ticking clock to find a merger. They identify themselves as a non-accelerated filer, a smaller reporting company, and an emerging growth company. This means they get to follow some simplified reporting rules for a while, which is good for them, but could mean less transparency for investors. This little phrase, subject to completion, basically means this is a draft. Everything could still change before the actual offering goes live. Here is the big picture for the offering. They are looking to sell 10 million units, with each unit priced at $10, aiming to raise a cool $100 million. Now, what is in this unit? It is not just a simple share. Each unit is made up of one Class A ordinary share and half of a redeemable warrant. That warrant gives the holder the right to buy another class of share later for $11.5. This is where it gets really interesting. A huge chunk of the money raised, $90 million to be exact, will be parked in a US-based trust account. This is standard SPAC practice. It is like a safety net to protect investor money until a deal is found or the SPAC dissolves. But here is the twist. Instead of just holding cash and government bonds like most SPACs, they are going to use part of that money to buy Bitcoin and Bitcoin-linked products. This is a bold move and definitely sets them apart. They're essentially betting on Bitcoin as a Treasury reserve asset. The rest of the money will stick to the traditional SPAC playbook, held in safe, government-backed securities. Shareholders who buy into this offering will have the right to redeem their shares for cash if they don't like the business combination target. This is a standard SPAC feature, giving investors an exit if they're not on board with the deal. They have a deadline. SPACs usually have a limited window, typically 2 years, to find a merger. If they don't, that money in the trust account gets returned to shareholders, and the SPAC usually dissolves. Their sponsor, Subversive Bitcoin Sponsor LLC, is putting their own money on the line, buying 350,000 units in a private placement. This shows their confidence in the venture. And then there are the founder shares, Class B shares that give the sponsor certain rights, including control over board appointments before a merger. These shares are significantly cheaper for the sponsor, which is a key point to remember when we look at dilution later. This is an IPO, so before this, there was no public trading for their securities. They are aiming for NASDAQ under the ticker SPAC. Let's talk money for each unit sold at $10. The underwriters get $0.45 and Subversive Bitcoin Acquisition Corp. pockets $9.55. This might seem small, but those deferred underwriting commissions are significant. Here is the kicker with those underwriting commissions. A portion is paid up front, but a much larger chunk, $3.5 million, is deferred. It is paid out only if and when they actually complete a business combination. This incentivizes the underwriters to help them get a deal done. If no deal happens, that money is forfeited by the underwriters. Now, about that dilution, because the sponsor got their founder shares for practically nothing, public shareholders buying in at $10 a unit are going to own a smaller piece of the pie than they might expect. This is a common SPAC issue, and it is worth paying attention to. Looking at their net tangible book value, which is basically what the company is worth based on its assets minus liabilities, before the offering it was about $6.74 per S-share. But they are selling units at $10. That is a big difference, meaning a significant chunk of your investment right off the bat is going towards costs and the sponsor's stake, not directly into the company's verifiable assets. The table of contents shows a lot of ground to cover, from risk factors to management and their proposed business. The summary section gives us the elevator pitch. They are a blank check company focused on crypto and blockchain, but with that unique Bitcoin Treasury strategy. Let's meet the leaders. Michael Auerbach, the CEO and chairman, has a background in investment firms like Subversive Capital and experience with other SPACs. His resume is quite extensive, including board roles in companies like Tilray Brands and Atai Life Sciences. The filing details his work in venture capital and successful exits, which they believe positions him well for this venture. Their CFO, Akshay Rajendran, comes from the quantitative digital assets space, having led pattern research. His experience in derivatives and alpha generation seems on point for a company looking to play in the crypto world. Director Michael Ash brings investment banking and corporate development experience from Galaxy Digital, a major player in crypto. Director Richard Blackett is a veteran investment banker with decades of experience in capital markets, including SPACs. His background suggests a deep understanding of traditional finance. Their partnership with Galaxy Digital, a big name in the crypto space led by Mike Novogratz, is a clear signal of their intended focus and access to industry networks. Galaxy's track record in digital assets and infrastructure is highlighted, aiming to make Subversive Bitcoin Acquisition Corp a preferred partner for crypto companies. Their strategy is to use their team's expertise and network to find and build value in crypto and blockchain companies. They're not just looking for a passive investment, they aim to be active participants in growing the acquired business. They're open to various types of businesses within the crypto sphere, from high-growth startups to more established companies. Industries like analytics, blockchain technology, custody, exchanges, and payments are specifically called out. They paint a picture of a rapidly growing and increasingly accepted digital asset market, citing trillions in global wealth, invested and significant market cap growth for crypto companies. Now, as with any investment related to SPACs, and especially those diving into crypto, the risks are substantial and numerous. The risk factors section is lengthy, but let's touch on some key ones. A crucial point for SPACs: they might not even need shareholder approval for the merger, meaning you could be buying into a deal that never gets your direct vote. Your main recourse is redeeming your shares. Remember those cheap founder shares? This risk factor spells out how that can lead to significant dilution for public investors. Even if the company's stock price drops after the merger, the sponsor could still make a hefty profit while public shareholders might lose money. This is the big differentiator and the source of many unique risks. Holding Bitcoin introduces volatility directly into their balance sheet, impacting financial results and stock price. They are upfront about Bitcoin's wild price swings, acknowledging it has traded in a huge range and has seen significant drops, including the possibility of falling to zero. The crypto industry has seen major collapses, and these risks are directly relevant to Subversive Bitcoin as they plan to hold Bitcoin and rely on custodians. If those custodians fail, recovering the Bitcoin could be a legal nightmare, because they are adopting accounting standards that require them to value Bitcoin at fair value and recognize gains and losses in net income each period. Expect those financial results to be a roller coaster ride, mirroring Bitcoin's own volatility. The use of proceeds table shows how that $100 million is allocated. A massive $90 million plus goes into the trust account, with $10 million earmarked for Bitcoin. That leaves about $1.8 million for offering expenses and working capital, which for a company looking to acquire another business is not a lot. Again, those deferred underwriting commissions are a big deal, and only get paid if a deal closes. The dilution tables are complex, but the key takeaway is that early investors in founder shares and the sponsor's discounted units will have a much lower cost basis than public shareholders. This means even if the stock price doesn't skyrocket, the sponsor can still walk away with a profit, while public shareholders might see their initial investment diluted significantly. This table gives a snapshot of their capital structure after the offering. The majority of their equity at this stage will be the cash in the trust accounts, including the $90 million to $103.5 million dedicated to the cash trust account, and the $10 million to $11.5 million for Bitcoin. As expected for a new SPAC, they have no operating history and no revenues. Their current cash and working capital deficit highlight their reliance on this offering to even get started. The auditors flagged a substantial doubt about their ability to continue as a going concern without the successful completion of this offering. This is a standard but important disclaimer for pre-revenue companies. This section reiterates their mission: find a crypto or blockchain company to merge with. Their focus on Bitcoin as a treasury asset is their unique selling proposition, aiming to provide a different kind of value than a typical SPAC or a direct Bitcoin investment vehicle. They've laid out criteria for targets, disruptive tech, defensible market positions, dislocated valuations, and experience management. They're looking for companies that can leverage their network and expertise. This is their core differentiator. They plan to use a significant portion of the gross proceeds to acquire Bitcoin, viewing it as a store of value and an inflation hedge, comparing it to gold but with potentially higher upside. This section details the deal between Subversive Bitcoin and the underwriters Jefferies, Canaccord Genuity, and Galaxy Digital. It also highlights a conflict of interest because Michael Ash from Galaxy Digital is also a director at Subversive Bitcoin Acquisition Corp. This means Galaxy Digital is playing a dual role, which requires specific FINRA rules to be followed. The underwriters have an option to buy more units if demand is high, which could bring in another $15 million. They've included selling restrictions for various countries, including Canada, Australia, the EEA, Hong Kong, Israel, Japan, Singapore, Switzerland, and the UK. This means they're not just selling to anyone, anywhere. Now, let's get to the numbers, or rather, the lack thereof, which is typical for a pre-IPO SPAC. As of July 2025, their total assets were just $177,257, mostly in prepaid expenses and deferred offering costs. Their total liabilities were $200,919, resulting in a shareholder deficit of $23,662. This is typical pre-IPO, where most of the money hasn't come in yet. Their statement of operations shows a net loss of $48,662 for the period from inception up to July 2025, primarily from general and administrative costs. There is no revenue because, well, they haven't started operations yet. The auditors with Thumsmith Brown gave a clean opinion on the financial statements, but flagged a substantial doubt about the company's ability to continue as a going concern. This is because without completing the IPO and finding a business combination, they don't have enough funds to operate. So, what is the verdict on Subversive Bitcoin Acquisition Corp S-1 filing? They're entering the SPAC market with a clear focus on crypto, but their most distinguishing feature is the Bitcoin Treasury strategy. This is a high-risk, high-reward proposition. On one hand, having Bitcoin as a reserve asset could offer upside potential from its appreciation, but it also exposes the company to extreme volatility and regulatory uncertainty. The dilution from founder shares is a classic SEAC concern. And the limited funds available outside the trust account for operations mean they need to find a deal quickly and efficiently. The leadership team appears experienced in both traditional finance and digital assets, which is a plus. However, the success hinges entirely on finding the right merger target and navigating the volatile crypto landscape. It is a bold bet leaning heavily into the future of finance, but investors need to be acutely aware of the amplified risks involved. Alright? That is our deep dive into Subversive Bitcoin Acquisition Corp. S1, what do you think about their Bitcoin Treasury strategy? Is it genius or a recipe for disaster? Let us know your thoughts in the comments. If you found this breakdown helpful, smash that like button and subscribe for more insights into the world of corporate finance. And don't forget to join our Discord community, linked in the description for more exclusive discussions and analysis. Thanks for watching, and we'll see you on the next episode of Corporate Decoder.